This is Doug Field and Brent Macy, your host for Healthcare Consumers Radio, and welcome back. We're on our final segment, and we're pleased to have, throughout this show today, we've been talking about the private exchange market, and it's a nice segue to have our final segment end around the focus on one of the leading consultants in this industry, Mercer, and their launch of Mercer Marketplace. And joining us to discuss what they're doing with Mercer Marketplace is Eric Grossman, Senior Partner at Mercer. Eric, good morning.
Good morning. Thank you for having me.
Yeah, good to have you. You coming to us from Connecticut today?
I am in lovely and cold New York today.
Oh. I'll tell you, we're in lovely and cold Atlanta today. It's we had a little dusting of snow this morning, so it's not springtime in Atlanta yet. I think it's very interesting as we look at this space, Eric, to see all the major consulting companies finding looking to find a foothold in the exchange marketplace. Tell us a little bit about what Mercer's doing with Mercer Marketplace and the uniqueness of what you guys are doing.
Sure. Well, first, we view the exchange marketplace as something that is going to grow very rapidly over the next few years. In fact, from our national employer survey middle of last year, 56% of the respondents said that they are going to consider providing benefits through an exchange over the next few years. My bet would be that percentage is increased today since we conducted that survey in the middle of 2012, and there's been far more intensity of interest paid to exchanges since then. So what Mercer has done is built an exchange that, in essence, offers one-stop shopping for both employers and employees. Mm-hmm. One place for an employer to go to offer all benefits coverage, complete administration and customer service solution, and all of the related employee communications around benefits. From the employer's perspective, we've also focused on that one-stop shopping. One place for a consumer or an employee to go where they could assess all of their insurance needs, whether those needs are health care, medical, dental, other of what's considered core benefits, life insurance, disability, and a full set of what commonly today are called voluntary benefits, whether they're supplemental health products all the way through auto and home insurance. So one place for a consumer to assess all of their needs and then purchase those coverages most cost effectively to meet their insurance needs.
Will you also see in your marketplace, will they have accessibility to some of the evolving decision support solutions like, transparency, et cetera?
So we are embedding a number of decision support tools for our members. Mm-hmm. We will have what we call guided shopping. Guided shopping is a very simple way through literally a handful of questions for people to indicate some basic characteristics about their needs and their risk characteristics, and that will enable us to tag various plans with a best match symbol. Mm-hmm. We actually think that most people will want to make decisions using that guided shopping, relatively simple, streamlined process. We will then have people who want to look at all the gory detail 3 times before making a decision and drill down into quite a bit of plan provision and carrier detail, and we will enable that as well. And finally, we know that we have a segment of participants that just want to talk to somebody who's going to, in essence, tell them what to do. Mm-hmm. And we will provide that type of decision support for people also.
So you'll have the call center.
Absolutely.
Yeah, I think that's so important. I think that everything's made about the web, and certainly these marketplaces are going to make it far more efficiently. But I think you're so correct that at some point, some people just want to talk to somebody.
Yeah, these are really important purchasing decisions for people that involve significant sums of money and obviously some very important areas like health and life insurance. It's not like buying most things on the web. and we do expect that a fairly high percentage of people, at least initially, they're going to want to talk to somebody.
Eric, what's the benefit? If I'm an employer, what's some of the top 3 benefits that for me to move to an exchange platform like yours?
I think that's a great question, and I'll focus on 2 things from the employer's perspective. The first is that for many employers, benefits management has become overwhelming. There is an ever-increasing pace of regulation. The market is extremely fragmented and complex, and while they know that benefits are a necessary part of their employment value proposition, the management of those benefits often detracts from their ability to focus on more strategic workforce issues. What an exchange offers is simplification and standardization and frankly, moving a lot of that management responsibility to the exchange provider. And we're finding that's a very attractive feature for a lot of employers. Then, of course, there's the money. And exchanges are frequently associated with the concept of defined contribution, something we've all gotten very used to over the past 15 or 20 years in the retirement area. But there's tremendous interest right now in employers saying, I need to de-link how much I spend on benefits from the underlying cost of those benefits, mainly medical, because that's where most of the spending is. And instead of increasing our costs for medical with the 6 or 7 or 8% that medical costs go up every year, we need to limit it to a defined percentage. Maybe it's 2 or 3%. Now, a company could do that today. They don't need an exchange to do that. But if you just did defined contribution and nothing else, it's just a cost shift.
Yeah.
What an exchange will facilitate, what Mercer Marketplace in particular will facilitate, is helping people make better medical decisions. We know that the majority of people are overinsured for medical, and they're overinsured for a few reasons. One is we have the most powerful force in the universe being inertia. I've had this plan forever, so I'll keep it. The other thing we have is fear. I go out there with a $1,500 deductible plan, and for a lot of people, that's the end of the discussion. We know through evidence that through better decision support and through being able to tangibly address that fear, being able to tell that person what you're most afraid about with the $1,500 deductible is that you're going to wind up in the hospital. Well, you can buy a relatively low-cost hospital indemnity policy to supplement that medical plan and protect against your risk and cover your fear. And if we get people to buy down to less expensive medical, that makes the defined contribution not just a cost shift, but it shrinks the overall cost of the benefits program, helps the employer manage their defined contribution, and helps the employee make the best spending decision on that defined contribution that the employer gives them.
We're all going through behavior.
Those 2 things, the complexity of benefits management and the move to defined contribution that are driving this.
I think that's very well said, Eric. We're all going through behavior change right now. The whole food chain is. And to your point, everyone understands defined contribution because there's been a lot of success in the retirement plan market with the defined contribution model. But you're actually stating that your Mercer Marketplace becomes the behavioral change solutions for the employee without burdening the HR and benefit department.
Absolutely. If we don't get behavior change, it's just a cost shift.
Yeah.
Is there a role? You had mentioned the guided shopping. A lot of the general agencies and other broker groups out there, and I know you guys are a leading consultant group. Is there a role for the general agents out there within these exchanges? Do you see a role for them? Maybe not only in yours, but in other exchanges?
Well, so Mercer Marketplace is a proprietary exchange to Mercer and related Marsh & McLennan, our parent company, sibling companies. But we do know that there are brokerages and agencies out there on a local or regional basis that have partnered with either insurers or technology companies to be able to offer an exchange.
Eric, what's Mercer Marketplace's sweet spot? What employee size are you targeting right now?
100 and up.
100 up. Okay, good.
And both insured and self-insured employees, and a lot of times exchanges have been associated with a requirement for fully insured coverage.
Right.
For employers at 800, 1,000 lives or up who are self-insured today, we see no value proposition in those companies moving to an insured basis where apples to apples, that's probably going to add 5% to cost at the same time when you're trying to decrease cost.
We got about a minute to go here on the program. Time flies when we're having fun, and we do hope we see you in Atlanta. I know that Mercer is going to be participating with us at our Forum East.
One of my colleagues will be there, in fact. We're looking forward to it.
Yeah, I look forward to seeing you too. Give us kind of a final takeaway from Mercer as it relates to your marketplace.
So, again, thank you for inviting me. I appreciate your time and everybody's time on the phone. I would say the key takeaways are the delivery of benefits is going to fundamentally change over the next couple of years. Exchanges are going to be a mainstay of the landscape. We believe an exchange that enables that one-stop shopping for both the employer and the employee and in a tangible way facilitates that move to defined contribution is going to work really well both from the employer's perspective and the employee's perspective. And we look forward and encourage everybody to learn more about exchanges in general and Mercer Marketplace.
Thank you, Eric, very much. Enjoy your weekend up there, and we'll see you soon. And to our audience, join us next week on Healthcare Consumerism Radio at 11 o'clock. Hey, this is Doug Fields, CEO of the Institute for Healthcare Consumerism, joined along with my co-host Brent Macy, Managing Director, and welcome back to the segment Healthcare Consumerism Radio, which we continue the discussion on private exchanges. And joining us to kind of lead this discussion is Jake Biscoglio, VP of Private Exchange Business for Cigna. Jake, good morning.
Good morning.
Hey, great to have you on the program. I really appreciate you taking time to join us today.
Glad to be here.
Yeah, give our audience kind of background on where Cigna, what Cigna's doing in this space right now with private exchanges.
Sure. So at Cigna, we see great opportunity for private exchanges, both from an active employee perspective as well as on the retiree side of the equation as well. And we are taking many steps into this emerging space. One with our own proprietary exchange, which we call Cigna Solution, as well as participating in many broker consultant exchanges on the active side, as well as on the retiree side, and offering our medical plans as well as our broad ancillary products, dental, vision, life, accident, disability, et cetera.
So the complete Cigna product line is in your exchange right now?
Both our exchange as well as the broker consultant exchanges that we participate on as well.
What do you see? You're excited about this space. You're focused on this space moving forward. What do you see the most confusion in this space right now?
I think the most confusion comes in that there are many different types of exchanges, and we like to say, and many as well in the industry say, you've seen one exchange, you've seen one exchange. So a lot of activity in this space, a lot of different types of exchanges, all with commonalities, but also taking a different approach to it. And I think from an employer perspective, from a carrier perspective, and ultimately from a customer perspective, sorting it all out is really important. So I think that's where the most confusion is. As with any emerging products or capabilities in the market, you tend to see that. And there's a bit of a sorting out period, and I think we're in that period right now.
Jack, you were, you led the development and launch for the audience that knows around Cigna's consumer-driven products. And when you look at exchanges, you see all the surveys out there, everything out there about, the explosion expected among HSAs. Do you see the same happening across the space?
It seems very similar to, going back probably more than 10 years ago now, what we saw in the consumer-driven health space. I think there's a lot of prognostications around rapid growth in private exchanges. I think the market is still very nascent, and we're seeing interest, a lot of interest, I would say. However, the adoption curve will take some time. think that's really predicated on ultimately the value that is delivered versus the promises that are being made through the exchanges. So it does feel similar. We believe at Cigna there will be strong growth in the space. The question becomes ultimately, what does that adoption curve ultimately look like, and how rapid does the growth occur?
Jake, this is Brent. When you go talk to employers out there in the marketplace and/or brokers, what are 1-2 things that they need to really look at when considering moving into a private exchange, employers specifically right now?
Yeah, I think from the employer side, it's really about understanding what are their objectives. Are they interested in an exchange because it's viewed as a vehicle to deliver more choice for their employees and the employees' family members, and ultimately getting them into the right plan that's best for them? Another consideration is from an administrative perspective for the employer, as they view this as a way to not only get more choice for their employees, but also to drive to a simpler administrative relationship with the carrier or their broker. I think that's another consideration as well. It's very important, and something we make sure that the employer is thinking about is ultimately the value, and really taking a long-term view of this as opposed to maybe just sort of a shorter-term approach, which is about maybe introducing more choice with an objective of getting at cost and trying to drive cost through buy-downs. I think there's a longer-term play, an opportunity to not only do that, but also get at better consumer engagement and overall improvements around health and productivity.
Yeah. Is there we have a very complex system the way it is right now, Jake. So from an employer and their employee standpoint, do exchanges help simplify, or do they add to the complexity of this already complex system?
Yeah, good question. I think there is a opportunity to drive simplicity done right. And by that I mean if you introduce more choice, and in many cases employers are offering more choice to their employees of medical plans. So instead of having maybe 2 plans to choose from, they can have anywhere from 6 to 7, some instances more. That leads to additional complexity, where the opportunity comes for the private exchange administrator is how do you take that complexity, put the right tools, the right communication, simplify the language so it's understandable, so that complexity ultimately gets simplified. And I think that's one of the key opportunities that is there from a private exchange perspective, and certainly an area that Cigna is very focused on. How do we take the potential for complexity and really simplify it?
Now, Jake, looking at I was going to say, now looking at let's say you're looking at your current book of business right now, and you look at the employers that have adopted, let's say, the high deductible type plans and went full replacement with those plans as the only option. Are you seeing that employer more interested in the exchange, or are you seeing employers who maybe aren't even at a full replacement, still offer plans of choice, taking the jump to look aggressively at the exchange option?
Yeah, I think it's a mixed bag right now. Certainly the employer who hasn't gone into a consumer-driven product offering, either full replacement or, encouraging people there, that may be a step before they move to a private exchange. So one of the things we like to do is really have the conversation with the employer to step back and say, where are you now? Why haven't you, if you haven't introduced a consumer-driven plan more aggressively, why haven't you done that? Is there something holding you back? And maybe the answer isn't that private exchanges is right yet, but maybe that's something that's down the line. Or the private exchange may create that opportunity to move that employer to consumer-driven plans that hasn't been there yet, because they see the value of more choice, get people to the right plan, give them the tools that help them get to that right plan. So it's really a multifaceted discussion, really centered on what are the needs of that employer, their population, and then how do you fit the right solution to it.
Jake, do you see across your customer and prospect base, and even through the brokers that you support and others, do you see any specific sectors and size of employers moving more aggressively than others?
So we've seen interest really across the board, and it's too early to call a trend. I think where you've seen the most adoption, however, has been on the larger side of the employer side. So, what we would define as national accounts, the bigger jumbo clients with a more geographically dispersed workforce. That's where we've seen the adoption thus far. Part of that is just in terms of the market and where the larger consulting firms who, in many ways were first to market have focused.
Right.
But, as we've launched our proprietary exchange Cigna solutions, we've seen interest really across the board and expect that interest level will continue to grow and really don't see it as something that's going to be limited to a size of employer at this point.
Yeah, we kind of see the same thing. In talks with a lot of the mid-sized employers that I classify as 250 to 3,000 employees, we see that large group actually the ones sitting on the fence that I think are going to move pretty aggressively when they start seeing continued good results come out from their peers and others in the space. Would you agree with that?
Yeah, I think it's really, you said it at the end, it's about results.
Yeah.
So there, again, a lot of opportunity, a lot of promise with exchanges across the board. The key, I think, is going to be value. And how does that value come through for the plan sponsor, but also for the individual customer or the employee of that employer, and helping them to achieve the goals they're looking for.
Now, Jake,
That's the opportunity.
When you talk about the employers there, what's the flexibility that they have when they go into these exchanges? Is it increased flexibility, or are they limited in what they can do by making this move in some ways?
Yeah, again, so I think everything really depends on which exchange. So, from the Cigna's exchange, we create a set of plans both on the medical side and the ancillary from which the employer can choose. So there's some element of a stable plan offering there, or set of plans, but we've also introduced some flexibility to make sure that a client is able to match existing plan or plans that they have, and then introduce some additional plan choices. So we want to make sure that we're providing the flexibility that's needed in the market, but also creating some standardization, because that's important in terms of efficiency around plan administration. And the broker or third-party exchanges, there is a mixed bag. Some are very standard in terms of, we're only going to offer 5 plans. Others are looking for 20 plans. Really depends. And I think that's one of the things that's an interesting area to watch, is to see how that morphs over time. Does it get to more flexibility, or does it stay more standardized? I think that's an open question. So,
Jake, listen, we time flies when we're having fun here, and this has been a really great conversation. I look forward to continuing it. You got about a minute, and I want to give you a chance to kind of wrap this and leave our audience with some takeaway thoughts from you.
Yeah, thank you, and again, appreciate the opportunity to speak with you today. I think with the private exchange business, it's very much an evolving space. It's important for employers to really step back and think about what are the drivers for why a private exchange might be a good solution for them and their employees, and ultimately to make sure they're thinking both short term and longer term in terms of where this ultimately goes. And I think the key thing there is how does that value ultimately manifest itself for the plan sponsor, for their employees, and ultimately how that aligns with their strategy.
Jake, thanks so much. I hope you can join us out west at IHC Forum and continue this discussion, but really appreciated your time today and this discussion. You have a great weekend. And to the rest of our audience, stay tuned for the next segment of Healthcare Consumerism Radio.